Hello and welcome to the channel. My name is Jardine and today I want to talk about some good news. I know I have a funny accent, but no, you did not misinterpret me. I did say good news. I know that can be hard to believe with financial markets in turmoil, the highest inflation in 4 decades, rising interest rates, supply issues, high gas prices, expensive housing, war and a whole host of other issues that we're constantly peppered with on the news 24/7. But hear me out. Whilst China is doing their best to catch up, the US is still the largest economy in the world. What drives 70% of the largest economy in the world? The consumer. Right now, the consumer is in pretty good financial shape and has arguably never been more prepared for a slowdown in the economy. One thing Americans have just now that they usually lack in recessions is a lot of cash. The Wall Street Journal reports that Federal Reserve data show that as the end of the first quarter, US households held $17.9 trillion in cash and cash equivalents, up a bit from the fourth quarter and much higher than the $13.7 trillion they had at the end of the first quarter of 2020. Indeed, before the pandemic, US households never experienced anything like the increase in cash they have experienced over the past 2 years, and this remains true even after adjusting for the run-up in inflation. Overall wealth has never been higher. Liabilities have been shored up. Housing debt service as a percentage of disposable income is off the floor, but still lower than it was at any time from 1980 to 2020. Retail sales are still strong and airports across the world are full again. People may not like inflation, but they aren't slowing down the spending. It's not just consumers that are sitting on large amounts of cash. Businesses are also cash rich and well positioned to cushion the impact of rising costs. Outside of the consumer, the job market remains very strong and unemployment is close to historic lows. Whilst a technical recession in the world's largest economy, 2 quarters of negative GDP growth looks likely at this point, we believe it could be mild because of strong consumer and business balance sheets as well as a robust jobs market. Let's be honest, if you want a job right now, you can get a job. That is not consistent with an economic recession. Shifting to the financial markets, it has been a tough year for investors. And I know it's tough to open up statements and see your life savings significantly lower, but the recent drop-off has brought valuations back to more reasonable long-term levels, and a considerable amount of bad news is already priced in. Obviously, never say never when it comes to the economy or markets. There could always be a calamity where things get out of hand, but do yourself a favour and turn off the news. It is not all bad news out there. I hope you've enjoyed today's video. Have yourself a fantastic rest of the day and don't forget to hit the like and subscribe button before you go.